Okay, today we are going to discuss about one IP. It is not a suggestion or it is not any kind of promotion. So in this video, what we are going to do is we are going to see all the pros and consequences as well as we are going to do some technical analysis. So I am going to explain, I'm just going to present whatever the thing which I have identified from this particular IPO. So apart from that, we are not going to discuss anything. So before you're going to invest in any IPOs, mutual funds and bonds, it is our responsibility, it is individual responsibility to look into that particular IPO. And after the complete analysis, after your thorough analysis, the decision has to be taken by the particular person. So now we are going to look into Laser Power and Infra Limited. So it is an integrated power infrastructure company engaged in manufacturing of power cables and conductors. It's engineering, procurement, and construction (EPC) projects for power transmission and distribution. Operations across 23 Indian states and 4 union territories, and export to 10 countries. So they have totally 3 manufacturing facilities in West Bengal. So the current IPO size is 7,420 crores. So in that 7,420, fresh issues are 5,420 crores plus OFS, which is 2,000 crores. The fresh issues proceed with mainly be used for debt payment and general corporate purpose. So the main purpose for this IPO is debt payment, and rest of the general corporate purpose they are going to use that rest of the IPOs. So first we are going to look into business trend. First one is integrated business model. The company manufactures cable or conductors and also executes EPC projects, giving better control over qualities, margins, and supply chain. And second one is strong order book. So order book for the March 2026, which is 32,434 million. It's a huge. And for in that manufacturing for 16,689 million, and EPC is 15,745 million. This provides good revenue visibility for the next few years. Third one is experienced promoters. Promoters have over 37 years of industry experience, particularly in power cables and infrastructure. Fourth one is government sector opportunity. The company benefits from government spending on power distribution, rural electrification, smart grids, and transmission infrastructure. These sectors are expected to continue growing. Fifth one is diversified business. Revenue comes from both manufacturing and EPC, reducing dependence on a single business segment. Fiscal 2026 revenue mix was about 73% of manufacturing and 27% for EPC. So improving profitability. So overall, after seeing that statement, we can able to understand that revenue. For the year 2024, the revenue is 17,476 million. 2025, it is 25,704, which is a huge jump. And in the year 2026, so far, they have 23,261. So now it is July. So when they prepare this whole statement, it will be of 3 months, 4 months only. So still they got almost 90%, 95% of previous year revenue. And PAT value is for the year 2024, it is 404 million. In the year 2025, it is 1,068. And for the year 2026, it's 1,516. Again, we didn't complete the year. Although revenue softened in 2025, profit continued to improve significantly only. Now let's go to the consequences. First one, high working capital requirement for the business. The EPC business requires significant working capital. Delays in customer payment can impact cash flow. Second one is raw material price volatility. Major raw materials like aluminum and copper are commodities linked, making margins sensitive to price. And third one is competitive industry. The company compete with large domestic and MNC players that may have strong financial resources and broader product portfolio. And order book risk. The order book does not guarantee future revenues. Delay, cancellation, or execution issues could affect earnings. EPC execution risk. So, cost run, project delays, labor issue, and regulatory approval can materially affect profitability. Finally, offer for sales. See, 2000 millions of the IPO is an offer for sales, meaning that portion of the proceed goes to existing shareholders rather than the company. So these are all the consequences in this particular organization. So next we are going to enter into the technical analysis of IPO. So that is the next thing which is very important that we have to discuss. The first thing that stand out is profitability. Will the company revenue decline slightly in financial year 2026? No, it is not declined. Actually, so far, I already told you that initial period, we are in the year 2026, 26 is not yet over. So, when that academic year, when we consider this academic year, somehow the cash, the revenue is slightly declined. It doesn't mean that complete failure. Its net profit continued to increase. This indicates that management is improving operation efficiently rather than relying solely on higher sales. Rising profit despite lower revenue are generally considered a positive sign because they suggest better cost control and improved margins. The PAT margin has also improved consistently from around 2.3 percentage in financial year 2024 to around 6.5 percentage in 2026. This shows the company is generating more profit from every rupee of revenue, reflecting strong operational performance. Next is the order book. The company has an outstanding order book of more than 3,200 crores, which is significantly higher than its annual revenue. This translates to a book to bill ratio of approximately 1.5. Any ratio above 1 indicates that company is receiving more order than it is executing, providing good revenue visibility for future years. Another positive in the is the business mix. About 73% of revenue comes from manufacturing, while 27% come from EPC project. Manufacturing generally offers better margin and more stable cash flow, whereas EPC project provide large growth opportunity but comes with higher executional risk. This balanced mix reduces dependence on a single business segment. One important factor is the use of IPO proceeds. A significant portion of the fresh issue will be used to reduce debt. Lower debt means reduce interest expenses, which can improve profitability and strengthen the balance sheet in the coming year. However, there are few technical risks which we have to keep it in our mind. The company operates in a working capital intensive business, meaning a large amount of cash get tied up in inventory and receivables. Delay in customer payments could put pressure on cash flow. Another concern is commodity price volatility. Since copper and aluminum are key raw material, any sharp increase in the price could impact profit margin if the additional cost cannot be passed on to customers. The EPC business also carry executive risk. Delay in project completion, cost runs, or regulatory issue could impact. Now, from the stock market technical analysis perspective, it is important to understand that this is an upcoming IPO. Since the stock has not yet started trading, indicators such as RSI, MACD, moving average, support and resistance, or volume analysis cannot be applied. Once that stock is listed, investors should closely monitor listing day volume, delivery percentage, institution buying activities, pricing substituting above the issue price, 20 days and 50 days moving averages, RSI between 50 and 70, MACD crossovers. If the stock maintains strong volume and consistently trade above its issue price, it would indicate healthy market participation and positive mood. So the final technical verdict. Fundamentally, the company looks strong with improving margin, rising profit, a healthy order book, and a planned debt reduction. Operationally, management appears to be executing efficiently despite a slight decline in revenue. From a technical trading perspective, investors should wait for the listing before the making decision based on the charts. So, of course, I in the from the beginning of the video, I told you that the decision is completely based on the individual, not because of any suggestion or any investor's perception or financial influencer perception. It has to be taken by the individual. So consider the pros and cons. Go through the PDF which they have shared in that IPOs. So go through it. As per that, if you have decided that the market is good, go for it. So it's completely up to a individual decision. Thank you.